From the floor of the CME Group, this is Danny Riley on today's Cash Close. And before I start this video, I want to do a shout out to Guy Adami. Guy, I think the smartest thing he ever said was complimenting Art Cashin from UBS. He truly is one of the best market mentors anybody could ever have. And the name of this video, traders, is the S&P 500 Futures 2016, a sea of red. The high of the day in the S&P came in at 1882 even early. The low came in at 1849 quarter at 11:30 Central Time. And last, on the 245 cash close, the S&P is 1872 even. We're down 42 and a half handles. Total volume. Three is size. We got big volume here. 3.4 million minis traded. It's been one of the highest I've seen in quite a while. And 8,000 big S&Ps traded in the pit. MOC, the MIM started out showing size to buy at before 2 o'clock. Gradually, like up 700 million to buy. Gradually went up to like 1.8 billion to buy. MOC, buy 2 billion. Somebody putting money back to work here. You know, there's been a lot of selling going on. Now, next week's shortened holiday week's economic calendar includes a total of 13 economic reports and a total of 10 economic reports and 10 T-bill or T-bond auctions or announcements. And a lot of housing numbers. That's the key to next week. Housing. Think housing. And then Tuesday's EcoCal starts out with the housing market index, the Treasury International Capital number, which is not a big deal, and a 3 and a 6 month T-bill auction, which they don't mean too much either. But if rates start going up again, those auctions could come into play. I doubt it, though. So here's my thing. So I came out yesterday saying I thought that maybe we could see a reversal of the way the price action goes in on Friday. Nada. The S&P's open lower. It did exactly like I thought it would do. You buy that lower open on a sharply lower open. I said on the opening print call, buy the weakness and then sell that rally, and that's exactly what happened. And then the futures went puking down all the way down to 42. It was a very, very scary trade. And with everybody sending out on Twitter and on my email pointing out the CME limits, I started to think maybe, hey, one of these days or even today, this could be the day. But it didn't happen. But I will say, like the title of today's video, it's been a sea of red. Now, the S&P closed down, is now down. It closed down like 2.5%. The Dow and the S&P closed down like 2.3, 2.5%. They're both down over 8.5% on the year. The NASDAQ closed down 2.75% and is down over 10% in the year. The VIX traded up to 30.27 and closed up 12% on the day. I don't know what the year change is. I know it's pretty big. And then crude oil traded down to into the $29 level, down 6% and down nearly 22% on the year. 20.5 to 22% on the 22.5%, 22% on the year. Now look, I got to tell you a story about a guy that I used to work with at UBS. He left. I still talk to him off and on. He left and he went to a mutual fund. And I'm not going to name the name of the mutual fund. I mentioned this on the Periscope today. But he called me last night and I picked up and he asked me how I was doing or how everybody's doing. And he told me that his order desk has taken more large sell orders in the first 6 days of 2016 than he has at any other stage throughout all of 2015. And, in any one 6-day period. So I don't know. That tells you a lot. I mean, I think there's big two-way flow going here. You see that kind of phone call coming in last night, but then you see $2 billion coming back in to buy. So obviously their mutual funds are trying to pick up some cheap stock. At least that looked like that way on the close, as the futures rallied pretty good late in the day. Now look I'm going to go back to the MrTopStep trading rules. I know. The first one, and I believe this, and the way these markets are acting is now you just buy, you sell, and you don't fall in love with your your positions. But the other part about this, and I'm still kind of laying in the weeds with this, is that when the S&P does start to go up, it's going to go up quite sharply, quite fast. Now, I don't know if that means that one of the levels that we put out today on the opening print was 1861. That was the early low. And then the other level that we've got is down to the 1820 level. And I still don't, like I've been trying to say, I still don't know if the closest is clear yet. You've got Iran coming back online, and I know I've been saying that a lot, but again, I think this may be a reason to see some capitulation in the oil market and a possible low for this whole thing. But that said, I'll tell you what, the China PMI stuff coming out on Monday night, Tuesday morning in China could be a precursor to what's going on next week. But we're going to leave it like that. It's been a tremendously volatile week. It's been a tremendously volatile year so far, and I don't think that's going to change anytime soon. Have a great weekend, traders. Be safe, and we will see you either on Twitter tomorrow or we'll see you on the opening print on Tuesday morning.